Welcome to Mex Moves, the weekly podcast where Damian Fraser and I, Eduardo Garcia, break down the topics and headlines shaping Mexico's business and financial landscape. How's everything, Damian?
Very well, Eduardo. How's San Francisco?
Very nice. We had a bit of rain, but nothing to worry about it. It was welcomed as it hadn't rained that much. This is a rainy season here, so everybody is happy. This week we have two conversations, interesting ones. One with Martin Mazza, who is the head in Latin America of Tools of Humanity. For those who haven't heard about this is a global technology company focused on building digital identity and verification infrastructure so that your personality is reflected. This is crucial in the age of artificial intelligence with all the fake elements that it can create. We also talked to Tomás Mindlin, better known as Tommy, who is co-founder and CEO of Tappi, a company that seeks to bridge the cash economy with all digital financial transactions. And Damian and I will also discuss the mining industry, which has been on the front pages of Mexico's papers recently for some security issues, as well as for the high prices metals are getting around the world. We'll discuss further the merger of Viva and Volaris and its repercussions on consumers, the bind in which Mexico finds itself when it comes to China investing here and the pushback it faces from generally our neighbor to the north, and a few other developments with new bank here in Mexico. So Damian, why don't you start with the mining industry?
Sure. Well, a story that you would have, most of our listeners would have seen, very, very tragically, 10 miners from a Canadian mining firm focused on silver and gold called Vizsla, which is quoted in the Toronto Stock Exchange. 10 miners were kidnapped and found to have been murdered. It's a pretty brutal story, as you can imagine. They were abducted in the municipality of Concordia in Sinaloa, which is roughly where Vizsla's silver project area is. And then a few days later, the authorities found clandestine graves and multiple bodies, and at least 5 of the bodies they found have been identified as the miners. Now, this is a business podcast, so we're talking about this because of there's been a lot of press coverage in general about insecurity in mining areas. Sinaloa is obviously right now suffering a lot of violence from this fight between the Chapo cartel and the Mayo cartel, who are struggling for ascendancy in that part of Mexico, and it's led to thousands of homicides and uprooted the lives of hundreds of thousands of people, if not more. It's also had a significant stock impact. Vizsla stock, since this news came to light, is down about 45-50%. So it's been very, very significant for it. Vizsla doesn't currently, as I understand it, doesn't currently produce silver. It's a project, but they had some very encouraging information in December about how much silver it was going to be able to produce, and they announced to the market that silver was going to be produced as soon as the second half of next year. And last year, the stock, I think, went up almost fourfold, so partly because silver prices were obviously on a tear, but also partly because of this positive news. The government came out and said, Garcia Hafush, the security minister, said, this was a case of mistaken identity, that presumably the Chapo cartel thought that these 10 miners were part of the rival Mayo cartel. Most people don't believe that. Whether they're right or wrong, I obviously don't know, but the mistaken identity explanation which Mexican authorities often come up with hasn't proved to be in the past, particularly reliable. The other sort of view is that, and there's no evidence for this, that entities connected to the mine were paying extortion money to the Mayos, so the Chapos killed them to send a message that they should be paid. The other is that the Chapos, who have been identified as the probable perpetrators of this crime, simply asked for extortion and it wasn't paid, or not enough was paid. So we don't know what's going to happen. There's a great Substack on the issued by mutual friend Joan Grillo, and anyone who wants to get into more detail, I recommend they subscribe to that. But it comes at a time when investing in mining in Mexico has become more difficult because of in addition to these security issues, especially around Sinaloa, because the new mining law has made it more difficult for private companies to search for deposits. It kind of leaves a lot of that work to the federal government, to the Mexican Geological Service, and they're probably not as good as some of the private sector mines. And also, open pit mining, there's been kind of to and fro on that, but it's been certainly frowned upon, made illegal. And that's, maybe as much as half of the mining production, and then permits in general, especially with environmental issues, very top of mind for this government and the previous government, have made it more difficult. So investment, I was looking at the Mining Association's website back in 2012. They said that mining investment was, $8 billion a year in Mexico last year, even with this huge rally in prices that you would have thought would have led to a lot more investment, was about $5.3 billion, so a 30% reduction over a little bit more than a decade because of the confluence of security, law, environmental permits, and so on. Now, I think the effect of this, Eduardo, has been much more on the mid-tier companies that have less political clout, probably less money invested in security, less able to defend themselves. A lot of these Canadian companies have struggled, whereas the big companies, basically, there's three big listed mining companies in Mexico. Grupo Mexico, obviously the biggest, Peñoles and Frisco, owned by Carlos Slim, have been able to withstand this. And because of this rally in commodity prices, silver and copper prices, the mining is now, by some measures, the biggest sector in the Mexican stock market. Actually, I was reading a report by Bradesco that amazing. Mexico's stock market is now more commodity driven than Brazil's, which always used to be more commodity driven. But we are missing out on a lot of mid-tier investment because of violence, because of allegations that in order to operate these mines, you have to pay extortion money. You have to obviously pay a lot more money in security. And then on top of that, you have a government, especially the AMLO government, which has been, hostile to new investment. And a lot of Grupo Mexico's growth, and which has driven its stock price, actually isn't coming from Mexico. Most of its growth is coming from Peru, rather than here, where it's easier to develop new projects.
Yeah, the mining industry, it's a tricky one, Damian. It's very much needed nowadays because of all the metals that the new AI technology companies are demanding. The data centers need lots of these metals. Rare earth minerals have been on the front between the fight between China and the U.S. But this security element, it's another one. We've covered it quite largely. We had Steve Fisher, if you can recall, telling us a story about the recovery of that mine in Ciénega, also that had been taken over by drug cartels. I guess the security situation is quite risky up in the northwest of Mexico, and then the regulatory framework that Mexico has installed in terms of making it very hard for miners to go ahead with their projects, communities against them in many cases. We had the pollution of the Rio Sonoro not so long ago, which has been a complete mess in rectifying that problem, because I think Grupo Mexico has put the money, but the money never reached the people that suffer the consequences of the dam breach. Anyway, a tough environment for the mining industry in Mexico and probably around the world. Here in San Francisco, we just watched an interesting documentary about the intent to do an open pit mine in Alaska, but the EPA opposed it. Despite the fact that it was millions of dollars of investment that were supposedly gonna bring oil, gold and silver and copper. the community was able to stop it for the benefit of the environment and their livelihoods. So, controversial issue at the same time. They're doing tremendously well in terms of prices in their shares. So we'll see how this moves forward. Mexico is in between all these contradictory elements that the miners face.
That's right. So moving on, Eduardo, I don't know if you had a chance to see this story in Reuters that BYD and Geely are among the finalists to buy the Nissan Mercedes plant in Aguascalientes, Mexico. It's a relatively new plant. Mercedes is moving production to Hungary, and I think Nissan is phasing out production of that model of the Infiniti car. So if it happens, to be quite positive, obviously, for the Chinese if they get it, because it will give them their first kind of major plant in Mexico, 230,000 cars, according to the Reuters story, and then they'll, I would assume, target the Mexican market, maybe the South American market, because right now it's difficult for them to sell Chinese cars in the US, and if they're dependent on a lot of Chinese imported parts, then they probably won't qualify for USMCA sort of tariff reductions, and which anyway have been reduced as we know. So, but according to the Reuters story, the federal government in Mexico is leaning on the local authorities to delay this possible Chinese investment because they think it might affect USMCA talks, having a Chinese company come in, and that might be strategically or tactically a kind of sensible thing to do. But I do think it highlights a kind of dilemma that Mexico faces, that's sort of so focused on getting USMCA over the line this year that it's turning down new investment projects, and in order to maximize the chances of not upsetting Trump. We talked about a few weeks ago not going to Davos because I didn't want to say anything off base, and I think that my own view is that they need to very much focus on getting USMCA over the line, but they shouldn't hold the whole economy hostage to that, because if it doesn't go over the line, and we saw some comments in Bloomberg from Trump allegedly saying that he'd quite like to cancel it, then we'll get the worst of all worlds. We've cancelled all this investment and we don't get USMCA. And what's your take on it?
Well, I was listening last night, Damian, to the Rackman review. I don't know if you have listened to that competitive.
That's Gideon
Rackman's podcast. And he was speaking. He was talking to the professor from Harvard on international relations and using the word predatory hegemon. And the conclusion is that the predatory hegemon does what it's the U.S. is doing, which is trying to extract benefits out of everyone without giving some in return. And so the ones that are being subjected to this treatment start looking for other alternatives to circumvent this hegemon's tactics. And they mentioned that the world is trying to do that. I mean, we saw Carney give that speech in Davos, and then before that he had gone to China. A lot of places are getting together. The Europeans signed a free trade agreement, I think, with India and with Mercosur. And so everybody, when you are bullied by someone, you try to look for others to help you out. And the problem with Mexico is that we're so close to the source of our discontent, and we depend so much more than probably Canada, much more than any other country, that you're caught between a rock and a hard place in the case of trying to find yourselves some wiggle room to try to circumvent the problems that the U.S. is bringing onto your economy. And so Mexico is in that situation like any other country, more so because if we move towards trying to make something with the Chinese, we might lose our main source of export purchase. But at the same time, that other export character that character that wants to buy your stuff. It's telling you that they don't need it, that you're not welcome. So I think the issue of Chinese investment in Mexico and the issue of trying to establish greater relationships with China is a huge dilemma that the Mexican government faces. I've been thinking about it. I don't know how to solve it. You would try to get closer, but at the same time, if you do, you might burn yourself. So there needs to be a very savvy, strategic person up there trying to manipulate these situations for the benefit of the country. But I don't think there is any other nation in the world that has so much at stake with the U.S., but at the same time would like to find other venues to make sure that it doesn't depend as much in the U.S. as Mexico. So it's a very tough situation for the Mexican government.
Without a doubt. But according to the Reuters story, the buyer will take on all the workers. So if you're a worker, needless to say, in this nice factory, and you read a headline that the government is saying, wait, you're going to be pretty frustrated. My guess is at least that the main focus would be on the domestic market. So they would basically just be replacing Chinese exports to Mexico. There wouldn't be a very dramatic impact on the U.S. China cars are already about 22% of Mexican domestic car sales. But anyway, you're right. It's a dilemma. It's not an easy thing to manage.
And I might just add one thing before we move to the next topic is that also getting close to China might not be the best. It's also a tough decision. China, I mean, as much as it's becoming now the nation that everybody's looking at, they do practices that are not necessarily the best tool in the world. So that's another element that has to be put into the equation.
Yeah, I'm not saying they should strategically be close to China. Definitely, that would be very foolish. I'm saying that they shouldn't be stopping, physical investment in a place like Aguascalientes, which has been decimated, well, not decimated, but has been badly affected by the U.S. car tariffs on finished cars and on car parts. So it's good investment. It's probably going to be replacing Chinese exports, and it's therefore something that they should allow to continue. But I think there's a real chance that we get to July the 1st, and for different reasons, USMA is not actually finally resolved. As a government official told me the other day, the only thing I'm certain of is that uncertainty will be permanent, and because that's what Trump likes, that's how he operates. So it might be a mistake to think that we're going to get to this specific point in time and then we can sort of let loose, as it were. But the biggest driver of investment is internal, dwarfs foreign direct investment. And Sheinbaum is clearly making a big effort to try and get the private sector to invest more, as we talked about last week with the infrastructure plan. Talking about investment, Nu, the fintech, wouldn't be a podcast, Mex Moves, unless we talked about a fintech, came out with some pretty amazing numbers in a video cast that they released and a press conference I think they gave. They talked about 4.2 billion total investment from the beginning, which is roughly 2020 to 2030. It's a bit of a misleading number, as often is the case when people announce these numbers, because if you actually listen to the video cast, it's both CapEx and OpEx they're considering as investment. Obviously, operating expenditure is not normally considered investment. Now, I think they say there'll be an incremental 2.4 billion between now and 2030. That would suggest that they've invested already 1.6 under this slightly unusual sort of bullish definition of investment. They also made, in the video cast, they made some interesting kind of claims, which I decided to check. They said that, to quote the CEO, Mr. Herrera, we've reached position number 5 in terms of the financial system in Mexico. And within credit cards, we're the top 3, the third largest issuer in the country. Now it's by clients, they have about 13 million clients. That's probably an accurate statement, because if you use debit cards as a proxy for number of clients, BBVA, Bancopo, Banorte, Banco Azteca, all have slightly more clients, or in the case of BBVA, many more. In Santander, which is the fifth without Nu, has about 12 million, so they are fifth. But obviously, clients isn't the way to measure size. Even on a credit card portfolio, they're just number 7. So BBVA, Santander, Banorte, Banamex, HSBC, and Invex are all bigger. But all these banks have multiple other businesses. Just on the loan portfolio, the loan portfolio is about 30 billion pesos at the end of December. And most of those credit card balances are paid off at the end of the month. So most of that money isn't generating income for them. But they wouldn't be in the top 8 in Mexico based on loans, and the banks have lots of other businesses. I'm a big fan of Nu as a customer. I use it every day, but sometimes their claims don't quite resonate, don't quite reflect reality, and it's not really necessary because they've done such a brilliant job. 13 million customers, and so on. Very great yields for depositors, forced other banks to offer higher yields. I mean, the story is good enough without them having to say things that don't really stand up.
That was what I was going to comment, Damian, that the new kids on the block, and they've done extraordinarily well. I mean, they don't need to be number 3 or number 5 or whatever they say. When the other figures show that they're growing, that they're successfully penetrating the market. Like you once told me, you can give out credit cards in the corner of Reforma and have 1 million customers pretty quickly. So that's not how you should measure it, and they know it. But obviously, I guess if the U.S. president does it, why not we exaggerate? In other words, yeah, but they are putting pressure in the market for other incumbents. So I think that's good for the consumer. And if you're satisfied with the way they bank with you, that's the bottom line. That's what matters in the end. And they will probably be able to grow even further as they make a greater push and offer different services.
So lastly, we mentioned at the beginning we're going to talk about the Volaris Viva Aerobus merger. I thought there was a great column by our mutual friend JP Spinetto from Bloomberg. I don't know if you had a chance to see it. Basically saying that it would be outrageous if the merger was approved because combined they have more than 70% domestic aviation by any measure. As he said, you don't need a PhD to work out that that's anti-competitive. And in any case, airfares have been rising higher than inflation in a period where their main cost, which is fuel, has been actually coming down. So it's now, they call themselves ultra low cost. But if you fly around Mexico as I do on Volaris or Viva Aerobus, you certainly don't get the same kind of price per mile that you get in Europe with the ultra low cost airlines for the most part. I think it's going to be a real test for the CNA, the Comisión Nacional Antimonopolio. It just got going in mid-October last year. Andrea Marvan is the head, and I think she, along with the rest of the board, going to be faced with these sort of competing pressures. On the one hand, you have the political pressure, obviously, from the shareholders. Alcantara, the owner of most of the shares of Viva, very powerful man, has the biggest bus company in Mexico. Sheinbaum, as we talked about the day after the announcement, said this was a great idea, although she did say it was subject to approval, but there was clearly a message being sent. And on the other hand, you have the technical people who, though I don't have any knowledge to this effect, would, I assume, say this is a bad idea. And the consumers, to the extent that they focus on these kind of issues, would presumably also like more competition. But also, Andrea Marvan is on a bunch of global sort of anti-monopoly committees, the ICN, and it would be quite damaging, I think, to the CNA if it went ahead and approved this. Now, even if they do approve it, it will be subject to conditions. I think everyone would agree on that. The key question is, what kind of conditions, and if those conditions have real teeth and are enforceable after the fact. But on the one hand, the CNA could upset the president. In the end, the president, because they're no longer independent, can decide, tell Ebrard, who probably doesn't care too much about this issue, one way or the other, as he's focusing on USMCA, say, you've got to approve this, but that would then undermine the credibility, not just here, but elsewhere.
This is a test case, Damian. I think it couldn't be as clear as this one. They put us as observers in a great position to look at what the Competition Commission or the DCAN is going to do. I think Andrea is a serious person. All these places where she participates are serious. I think she believes in competition. You don't need to be neither have a PhD nor to be a rocket science to determine that 70% of the market share could be antagonistic to the consumers that fly. And the purpose of having competition is to keep those prices of airfares low. Both companies were supposed to be attending low end of the Mexican passenger flyers, and so it will be the test. I wonder whether the president, when she made those comments, knew what was going on. Obviously, she knew, but I wonder whether she calculated the relevance of this merger in terms of consumer power that the entity that will come out of it will have, and it's going to be important to see what they do. To me, it's always been a mystery why López Obrador and Sheinbaum have always been very antagonistic against that entity, the autonomous, when it was autonomy, when he had autonomy, because it's meant to, and he was beginning to put the monopolistic powers in place, or attempting to, and instead of giving it greater force, greater powers to do its job properly, which is what Mexico needs, they dismantle it. It's something I don't understand. Even if it was too expensive, which it wasn't, I think the fines that the previous entity placed recover much more than what it cost, or it was close to it. You don't destroy that institution. You make it better. There's always room for improvement, and they didn't do that. They put it underneath Ebrard, and Ebrard will follow what Sheinbaum says. It's a test. If it passes, that's it. We know the competition in Mexico is back to the old way it was, and that will be for the detriment of everybody.
Yeah, I rarely sort of accept that's it as an argument, because things are evolving all the time, and the new authority has additional powers than COFECE had. It is part of the executive, so it's going to be a lot easier to execute those powers, have them implemented. It's got bigger teeth in effect. So, and there are some signs on other issues that it's moving, maybe a bit more aggressively. I think it's more, not so much that there is no longer going to be competition. I think it's more that the competition authority will be used in some cases to pick winners and to punish losers. So it wouldn't surprise me that, and especially if they do rule in favor of this, that they then pick another issue, and become very aggressive on it in order to sort of demonstrate that this is a credible competition authority. So you'll see a sort of a reflexivity of sorts in public policy. So it's more about the discretionality of it than about them being kind of ideologically anti-competition. I don't think that that's the issue. I just think they care, like most politicians, about the political outcome of decisions. And if those political outcome is anti-competition, well, so be it. But in other cases, it might be aligned with their political goals, or they might not have specific political goals. They did rule in favor of Gruma, as you may have seen. There was a ruling from before that they might have to divest some of their cornflour plants, and in the end, as I understand it, they're not going to have to divest any of them. Now, I think it's very rare, very, very rare in competition policy that you order companies to divest assets. It's sort of the AT&T example, Standard Oil, but you can count them on one hand. So I understand why they refrained and instead of focusing on market share, which is a product of historical market decisions, focused more on action and behavior. And so it may be that in this particular case, it made sense. And for Gruma to keep its assets, I think it would have been very, very strong to have forced divestiture. I mean, even Google, which has dominant market share, obviously in search, hasn't been forced to sell off Chrome or sell off YouTube or some of the things that people wanted it to do. Not even in quite pro-competition countries like the EU. So we'll see where it goes. It may be something in the middle, like you're approved, but you're going to have to do A, B, C, D, and then it's going to be a little bit more difficult for us to reach a firm conclusion. It'll be a bit more fuzzy and a bit more vague what's really gone on.
You're right. It's the discretionary element that it's probably troublesome, because we'll go back to the old ways, in the sense that instead of having a technical decision carry the process, it will be more of a political. So the winners and losers, as you mentioned, will be the ones that know how to manipulate the system rather than comply with competition law. I mean, I'm willing to see what the resolution is, if it's in favor, and what the conditions is. Maybe they will bring it down to a 50% market share or less than that by selling slots and selling airplanes. But God, in principle, let's see what. Well, let's give them the benefit of the doubt for the time being, but it doesn't look promising, if you ask me, if it's approved the way it is.
Terrific. So let's move to our interviews. So it's a real pleasure to have with us today Martin Mazza. Martin is the head of Latin America for Tools for Humanity. How are you, Martin?
All good. Thanks for having me. Good morning.
The pleasure is ours. So for those that aren't familiar with it, Tools for Humanity is Sam Altman, that's the OpenAI founder. It's his startup focused on building a global human network using biometric verification and blockchain technology. Its flagship product, World ID, aims to secure human verification and broader access to digital and financial services worldwide. It's very active in LatAm and Mexico, and Martin has teams here in Mexico and in much of the rest of South America. So, Martin, tell us a little bit more about Tools for Humanity, that for people not that familiar with it, what it's up to, especially in Mexico, and why do you think now is the right time for this technology, for this product?
Absolutely, and good morning again. Thanks for having me. Tools for Humanity is a technology company and core contributor to the Word project, formerly known as WordCoin. We're talking about developing tools and technologies to enable the Word vision and protocol. Word is developing a human-only network. A bit of the story behind this idea and what this means. Sam Altman and Explania, late in 2019, met each other and started discussing some ideas around the impact that AI would have in our day-to-day lives. That impact, predominantly what they saw, is how proliferation of AI and AGI will make it a bit more difficult for us as humans to interact in digital environments or try to preserve trust, right? How would you know in a podcast, for example, you are talking to Martin, the real, human version of Martin, and not an agentic version of Martin? Back in the day, in 2019, this sounded a bit crazy, but actually understanding the underlying impact of AI, they were seeing how this can be a problem in internet and how we manage our digital lives. So they set on this mission to develop Word as an open protocol anchored by Word ID, that is a proof of personhood. So basically, it's a credential that allows you to prove that you're human online, to solve for that problem. Basically, preserve trust online, on the internet, across digital environments. So in a nutshell, going back to Tools for Humanity, that's what Tools for Humanity is building. Technology to enable the World Project to be this global human network in which we as humans have a way to prove that we're humans online, with the mission of preserving trust in digital tools, in internet, and further drive digital inclusion, financial inclusion, right? One of the key aspects of this is in a world of AGI and abundance of superintelligence and the economic value that will eventually create. How do you ensure in the future that you have a way to enable that value to reach humans if you are not able to differentiate what's human and what's not human online in a digital environment? So at the end of the day, that's why also we also discuss a lot about enabling a digital economy, enabling financial inclusion by this proof of human.
So how, Martin, would you prove to me that you are, in fact, Martin Mazza on this podcast and not an agentic version of yourself if we're using World ID in this context?
Yeah, well, and that's a bit of a challenge, right? And in the past 6 years, we've been working very hard on developing the tools to enable that. Within Tools for Humanity, we designed the orb, that it's a device that basically creates a cryptographic proof using your biometrics that you're human and that you join the World Network. You can then use it across different digital platforms. Right now, in the past 5 years, we've been predominantly focusing on onboarding humans to the network, but we're already seeing some applications. For example, Tinder has integrated World ID to prove humans are interacting on that platform. So to cut to the chase, kind of in the future, let's say the service we're now using for this podcast integrates World ID into the platform. Today, this morning, I could have easily used my smartphone using a QR, using an in-app messaging Word app to send a signal to the platform to prove that I'm a human. So that's how this works in general.
So if we bring it down, I mean, it seems to me obviously hugely important that something like that exists when there's so many deep fakes and fake identities around, and so easy to create now with AI, as we've seen with some of the scandal around X in the last few weeks. What are you doing in Mexico, in Latin America in general? How far has Tools for Humanity advanced in rolling out its products here in this part of the world?
Look, Word is for everyone. It's for every human on the planet. That's why we use biometrics. That's why Tools for Humanity had to design the orb and this technique, because we feel it's one of the most robust, secure, and privacy-preserving ways that can also drive inclusion, right? This is main pillars of the project, how we could achieve a trusted World ID, proof of human, that is inclusive to every human on the planet. So since day one, we started testing and thinking with that mentality. This needs to be available everywhere. And I'm particularly excited about Latin America, because I feel that it's one of the regions in which World can drive more impact and adoption faster than in other regions, because of traits that we have as Latin Americans. Like, first, Latin Americans, we spend more time browsing and surfing on the internet, using social media than any other region. Like, we over-index other regions in terms of time spent online. Proliferation of internet, broadband, and smartphone devices already, like, it's at its peak, and it's almost ubiquitous, and pretty much over 90% of the population has access to that core infrastructure that can enable World at scale. And then there are particular challenges to the region that I feel the tools that we discuss, World ID, are primed and positioned to solve for. Latin Americans because of that first statement that I mentioned about we spend more time online than any other region. We spend more time in social media than any other region. We're also more prone to fraud. We're also more prone to deep fakes. Truth of the matter is like close to 90% of Mexicans have been victims of online fraud or know someone that has been. If you look at payments and payments behaviors, chargebacks in Latin America are 3 times that of the US. So the cost of fraud is predominantly higher in this region than in developed markets. And I feel that combination of all these things makes World ID something very relevant for the region. And lastly, the fact that still I feel there's a gap. There's a lot of people in Latin America that still rely on cash, right? We know Mexico is still a cash-based economy in spite of all the efforts to digital and drive financial inclusion. Also, like via fintech applications, cash is still king in Mexico. It's most used and most frequent method of payment. And I feel something like World ID can enable that financial inclusion at scale, having an anonymous, privacy-preserving way to show that you're human online can be a backbone of an architecture to then enable financial inclusion at scale. So kind of I feel all these things make a unique combination in Latin America. And a bit we prove it, right? Out of a bit over 17 million verified humans that have joined the World Network, 9 million are in Latin America. So definitely Latin America has been a big and important part of World in the past few years.
I mean, for something like this to work, I imagine you're going to need huge scale. I mean, people aren't going to want to join World ID, Pay, and WorldCoin if other people are not also part of the same network. So you mentioned that you've got millions of people signed up, but still a very small part of the population. What are you planning to do to get to the kind of critical scale that you need for something like this to take off, specifically looking at Latin America and Mexico?
Yeah, I feel we are still very early in the life of Word as a protocol and Tools for Humanity as a technology company. We definitely need to continue evolving and innovating our technology to make it more accessible across the world, and particularly in Latin America. I feel we need to find ways to enable human verification with a lot more proximity, more convenience. One of the things we're working on is how we enable broader distribution of the current orb. So basically any person that creates an account, downloads Word app, creates an account, doesn't need to spend more than 15 minutes to find an orb from their location. One of the things we did last year, a partnership with Rappi to try to enable an on-demand verification service. We learned a lot. I feel we still need to double down on that direction. And in terms of innovating in our technology, there's so much we can do with the current orb design and orb device. And we've announced last year, and the Tools for Humanity is working very hard on shipping and delivering what we now call the Orb Mini. That is more like a portable device that I feel that would be a big unlock for Latin America. So basically, imagine you, Damian, could go to a retailer, buy or lease this Orb Mini device, and then in your day-to-day, you onboard your friends and you verify your friends. Or Saturday, you're throwing a barbecue at your place and you onboard your friends. Enabling verification services as part of community, as part of everyday activity. And for that, we need a new device, what we call the Orb Mini. So kind of, I feel continuing innovating on our technology, it's key. And of course, educating on Word in general, raising the awareness of the project. But honestly, with all the things that we've seen on AI, I feel pretty good where we are in terms of changes that are happening, how we're adopting AI in day-to-day, and how it's becoming more clear the need for something like Word ID.
And how do governments feel about this? Because obviously many governments want to control people's digital ID. In Mexico right now, there's a rollout of requiring everyone with a mobile phone, to provide the carrier their official identity. Do you think they're going to be keen on this kind of parallel global proof of person technology company that to some extent from their perspective might be competing with their own kind of official identity rollouts?
Look, in general, first, I think there's a lot of misunderstanding of what word does. And I attribute a part of that to the limitations of our language, meaning we always default to the word ID. And word is not building ID. Word is building proof of personhood, proof of human. At the end of the day, a credential that enables you to prove that you're human online. Right now, we rely on CAPTCHAs for that. And I do see CAPTCHAs embedded in multiple workflows across the public sector, across governments, in which they trust in CAPTCHAs and they use it also as a primitive to ensure that bots don't get into ID issuance. Truth of the matter is that now bots can circumvent CAPTCHA. So I honestly don't see why not governments would, in the future, consider adopting Word ID as this new primitive that shows that you're human with a lot more resiliency, resistant to AI, that enables that trust. So definitely, I feel public sector could benefit a lot from using Word ID. Of course, as I mentioned earlier, I feel there's still a lot of education that we need to do, explaining what Word brings to the table. But look, we're already seeing some positive momentum on that front. Tools for Humanity and the World Foundation signed an MOU with the government of Malaysia. They're looking into how to integrate Word's tech stack, Word ID, Word Chain into their ID issuance systems. And I expect 2026 we'll start seeing a bit more progress on that direction. So, like in short, this is very complementary to government identity solutions. It's definitely not a replacement. Word ID won't be able to solve many things that a real ID solves for, and we still need. I personally feel we still need sovereign government IDs for a lot of reasons, and definitely see how Word ID could be a primitive that, for example, enables to improve the quality of those identities that governments issue.
Because Mexico right now has a new digital transformation agency, as you know. Would you like to work with them to help digitalize the economy, broaden access to the financial sector and proof of personhood?
One of the things that Word ID and Word brings to the table is its technology and its innovation in terms of privacy tools. And that's where I think there's a lot of benefit of considering using Word ID in different workflows, both private and public sector. Meaning right now, and in the past 20 years, I feel we became used to loading IDs, passports, the INE, CURP, across many different workflows to open bank accounts, to have a wallet, to prove that you're over 18 in certain websites or applications. And across all those instances, I'm giving away a lot of information that usually it's too much or could be solved by minimizing the amount of data that I'm giving. If I want to show that I'm over 18 in a given application, dating app, or whatever, I shouldn't need to upload my entire passport, or let's say in Argentina, my driver license that actually has my blood type, my tax ID, has a lot of information, not relevant to prove age. And Word, what is building via zero knowledge proofs, AMPC, that's anonymous multi-party computation, and leveraging blockchains are tools to actually solve for that. So imagine you could show you're over 18 without revealing your name, without revealing your real ID, and a verified trusted credential that shows that you're over 18. As we build the proof of personhood, we've also started looking into a broader set of applications of Word ID to enable some of these use cases at scale. And in government initiatives around ID, I feel that Word brings a lot to the table in terms of mitigating data risks. I feel there's a lot of opportunities there to collaborate in general with ID agendas.
As we mentioned, Martin, at the beginning, one of the two co-founders is Tools for Humanity, Sam Altman, obviously famous for also being a co-founder of OpenAI. Just today or yesterday, it was announced that one of his other startups, I think it's called Merge Labs, is raised $250 million. And the largest check was in fact written by OpenAI, according to a news story that I read this morning. Merge Labs' goal, it says, is to bridge biological and artificial intelligence to maximize human ability, agency, and experience. What is the relationship, if any, between Tools for Humanity, OpenAI, Merge Labs? How does this sort of Sam Altman ecosystem work, or are they all separate?
Yeah, look, truth of the matter, these are all separate entities, so there's no relationship across them, other than actually sharing some of the founding team members. And Merge Labs is also co-founded by Alex and Sandro, Alex Blany and Sandro Herbig, that are also co-founders Tools for Humanity and partners with Sam across both Tools for Humanity, the Word Protocol, and now Merge Labs. And for me, look, being a former founder myself, I do feel this is very natural as you're building frontier technology and solving different problems. You've also start venturing into different paths and understanding pain points of things and uncovering pain points of things that are kind of not ready or perhaps are broken or are missing to enable some of the technologies you're building. So I see very natural that this team of founders, Sam, Sandro, Alex, and some additional folks are now pursuing a mission with Merge Labs to enable ways for us to interact with AI more intuitively. And it's not the first time we've seen this in general. How many times have we seen companies that started perhaps shipping books online or building e-commerce, and then right now become one of the most important cloud computing providers, solving a pain point that they needed to solve for themselves and solving that pain point for others, right? So kind of, I feel in general, this very natural path of entrepreneurs, founders, and but important to highlight, these are different companies and ventures. But personally, very excited about what this team of founders will build at Merge Labs. Literally, the other day I tend to travel a lot across the region in general and the globe because of my responsibilities at Tools for Humanity. So unfortunately, I tend to do a lot of work on planes, and I was preparing for a meeting, reading some materials, a long 20-page document, and I was thinking, how cool would it be to have some sort of interface in which my brain is able to absorb those 20 pages, perhaps while I'm sleeping, or I don't know, more intuitively, right? And I don't want to sound creepy, but in general, I feel right now we're relying on screens, on smartphones. I still need to read to absorb certain information. Can there be ways to absorb information more fluently, perhaps, right? More efficiently? I don't know. I feel in general we're AI is unleashing a lot of creativity, a lot of productivity. So I feel in general very excited about possibilities in the future.
Wow, maybe you'll be able to absorb podcasts while you're asleep and won't have to waste time listening to them in your waking hours. Last question, because obviously our audience is mostly focused on Mexico. As you've been traveling around the world, traveling around Latin America, how does Mexico's adoption of tools for humanity and in general disruptive technological change compare to Argentina or Colombia or Brazil? How would you classify Mexico relative to the other countries when it comes to embracing disruptive technological change as evidenced by what you're trying to do?
Perhaps there are two sides of the coin to this story. Mexico, I think, is uniquely positioned because of its proximity to the US, market size, perhaps stable country in general, if you compare across some other peers that we have in the region, and access to capital as well. So we've seen, I feel, a lot of venture capital and investment in general in Mexico, definitely more than in markets like Argentina or Colombia, pretty much at the same levels of Brazil perhaps higher. So I feel there's these conditions make it unique, and how many, for example, fintech has been recipient of significant venture capital and investment. There's been a ton of development in that, in last mile logistics, in many different application of technologies. So we're very excited about that, and in general, I feel there's been a lot of progress. On the other side of the coin, perhaps digitalization a bit slower than other regional peers. I was teasing the other day with a friend that perhaps this is a survey someone should do someday, but I'm pretty sure that more Mexicans know what Pix is than what Cody is. And Cody was this initiative, to do digital payments in Mexico, and that definitely didn't have the traction that a Pix in Brazil, or like the infrastructure that Argentina also developed in terms of payment rails. So look, truth be told, and I don't want to hurt anybody's feelings, but I feel underlying payment infrastructure and financial infrastructure, Brazil has been very forward in that direction, and countries like Argentina and Colombia are following. I feel there, Mexico, perhaps it is a bit behind. But again, as I mentioned earlier, like the conditions are there, the access to venture funding, talent, there has been a ton of investment and progress made. So yeah, I feel there's still work to be done, but in general, excited about the opportunities.
Brilliant. Well, Martin, our time has run out. I could carry on for a lot more, but thank you so much. I hope you are the real Martin and not the agentic one. Maybe next time Riverside will be integrated to Tools for Humanity and World ID. All the best.
Thank you.
Delighted to have with us today Tomás Mindlin. Tomás, or Tommy as he's known, is the CEO and co-founder of Tappi. Tappi is a leading LatAm paytech that powers payments and collections across multiple Latin American markets. Just a few days ago, Tappi announced a $27 million Series B round led by Kasek, with participation from Endeavor, Catalyst, and Latitude, among others, to accelerate expansion in Mexico, which is its largest market. How are you, Tommy?
Hi, how are you? Thank you very much for having me. It's a pleasure and really good. Can't complain, honestly.
I imagine with $27 million in your pocket, you're probably in a better mood than most people right now. So on that subject, I mean, you also said, I've read, that you're profitable. So why raise money now? What does the capital buy you that, in terms of speed, network, M&A, new regulatory licenses? What's the point of raising this money?
It's a very good question. Basically, I would say it's twofold. On one side, I think it allows us to go more aggressively to expand our network. Basically, Tappi, for those who are listening, to make it more clear, Tappi powers the cash deposit and withdrawal network in Mexico. So basically, if you are a Nubank user and you want to deposit physical cash into your account, you go into almost any store, or like more than 40,000 stores in Mexico, including Oxxo, 7-Eleven, etc. And basically, you can deposit cash into your account. And on the other side, once you have that money inside your digital account, for example, in Nubank and several, like more than 15 other banks, if you want to pay your bills or top up your phone, so pay your power bill or pay your taxes or pay your cell phone bill, we are the ones connecting Nubank, Story, like every single bank to more than 300 billers on our backend. And this is all seamlessly integrated into the each bank's application or front end. So basically what this capital raise allows us is to double down, go deeper into our network and basically reach an additional, tens of thousands of stores to allow more and more people to deposit their cash, and then include into our network like thousands of billers. Think about schools, universities, like local clubs, smaller credit companies, and allow them to be a part of Tapi's network and collect through all our banking partners. This requires a lot of investment, as you might imagine, like going after thousands of stores, like tens of thousands of companies. It requires a lot of effort, a lot of capital, and that's what we're trying to do.
Great. So would it be fair to say that Tapi in Mexico at least is a sort of bridge between the cash world and the digital payments world?
Yeah, definitely. We are the only cash network that allows to transform physical cash into digital money inside like most of the bank accounts. Of course, like each bank, they have their own branches and the ATMs, but basically for any fintech or for any company, any financial institution that doesn't have their own branches or wherever they don't have branches, we allow them to receive that physical cash and start becoming part of the digital economy, let's say. And then, of course, we allow for that same cash that's now sitting in a digital account to be able to use that for your daily payments. For example, like doing a top up for your phone or paying your bills. That's something that absolutely every single household in the country and in the region has to do.
As part of this expansion in Mexico, will you be looking for any additional regulatory licenses, an IFPE, any way to like directly access SPAY yourselves, or are you comfortable with your current regulatory situation?
So right now, in terms of regulation, we have authorizations from the CNBV to be able to act as an intermediary for taking these deposits in cash and give them to the banks and fintechs. So we have that right now. We might be looking for additional licenses to go deeper into the services that we can offer to companies wanting to do their collections and do their collections with us. So not only we have launched a couple of months ago TapiPay, which is our solution to enterprises and smaller companies that basically allows them to collect through every single, like with a single connection to collect through any payment method. So not only access, of course, our own like banking network and physical network through our stores, but also collect through SPAY and collect through credit and debit cards in like credit cards on file. This allows more and more companies to start collecting digitally. In order to do that, like a deeper licenses and deeper integrations into the financial ecosystem might be helpful to give them more access and better products.
That would be a wallet, or what kind of license?
Yeah, probably an IFPE license. Like we haven't started yet, but that's something that might be in the coming months.
From afar, there's something a little paradoxical about Tapi's business model, because if Mexico was very digitalized, like Brazil is and some India is to some extent, there wouldn't be such a need for Tapi because you wouldn't be needing to change cash into digital payments and vice versa. Are you worried that Mexico will become, like most other countries have become, very digital, and that will undermine your business model?
No, I think it's the other way around. So when we started Tapi, we were never expecting to create a cash network. We started off with a bill pay network. And what we wanted to do is actually connect banks to different billers and to be able to offer every single bill payment inside the bank's infrastructure. What happened is that we slowly started to realize that still like 50% of the market was still underbanked, and there was no way to effectively reach them without having the cash network as well. So that's why we expanded into the cash payments itself. But if you want to look at Tapi, even if we continue this development and we have every day, like let's say 10 years from now, like cash payments go down from like 80% or 90%, whatever they are, to like 10%. Probably all those kind of payments will be directed into one of two. On one side, credit and debit cards, probably. That's something that we are offering through TapiPay. And then the second part is probably bank payments, like directly like bank wires or like any kind of bank payments. We are building both of them. So we started as a very bill pay network. We realized that we need that bridge in order to get more people into the digital economy to continue growing. But if that ends up like disappearing and moving into digital, we'll probably be the ones who benefit the most. So I'd like to think of Tapi, probably think of it as like the ACH network in the US, or even the direct debit in the UK, that I know you're British. It's something very similar to that. So basically, we will be the ones benefiting the most because we are the only standard to do these debits.
Tommy, how are you following on Damian's question? Do you think the fact that you found out that this cash transfer was still very important, and is that why Mexico has become your primary market?
Yeah, I think both were like they come from the same point. The reason why there wasn't a network as comprehensive as Tapi before was basically because there was so much cash in the system that like 99% of the payments, of the bill payments in the country, were being made in cash. So there was no need to actually develop a banking network for this kind of payments. So when we came into Mexico, I think we had the right timing. That is like basically, of course, there is some merit to us, but it's a lot of luck. There's like the digital economy is actually growing really, really fast. Like there are lots of fintechs, lots of like newly created banks that are doing that effort to get more people from the physical cash into the digital economy. So we had the perfect timing in which like it's starting to become relevant, but no one did it before because there was no need for it, or at least it wasn't as appealing for anyone else before.
How is your business model settled, in the sense that do you charge per transaction, or how does it work for your revenue stream?
It's very similar to like Stripe. Whenever you receive like Stripe processes a payment for let's say any kind of company online, like they charge a fee, a transactional fee out of each payment. And then, of course, Stripe then shares part of that with the acquirer, let's say, or the payment network. So it's something similar. We charge a transaction fee to the companies to which we collect the payments for, and then we share part of that revenue with the banks and with the fintechs. So what we do is we create a new revenue stream for the banks, and we keep a small part of it. So most of it goes to the banks. And we take like a small network fee.
And since you're basically behind the scenes, are there any other competitors in Mexico that offer the same services that you do? I know Conecta and other ones, but they are more like payment transaction systems simply, right?
Yeah. So there used to be a competitor to us, which is Arcus, which was owned by MasterCard, which we acquired last year, complementing and creating like a unique network serving like, let's say, almost every bank in the country. So there used to be a competitor. It's a type of business, like usually payment networks, you don't, like if you take a look at each country, like every single country, you don't have like 10 competing networks. You only have like maybe one or maybe two. And it makes sense because you need a lot of network effects in order for it to work. So for example, let's say if I had only like one or two banks, if I go to any biller and say, hey, you want to collect through one of my two banks? They say, yes, okay, but I need the other 5, the other 15. And the same happens on the other way around. Like if I go to a bank and say, hey, you can connect to my API and start processing payments for these 10 billers. They say, okay, but like I'm missing 90% of the rest. So it's very network based. So we need to be always on the lookout to grow both sides of the business. I think what we've been able to do, and especially with Arcus, the Arcus acquisition, is actually get most of the banks and fintechs working with us. Arcus was very good with the more traditional banks. We were very good with the most, let's say, tech-first companies like Nubank, Mercado Pago, Story. And I think the both assets or both networks were very complementary to each other.
Last question from me, Tommy. What new products and services are you considering offering now that you have this expanded capital base? And how can banks and your clients use the data that you have to improve their credit offering?
I'll start from the last one. We do not hold any personal information for each of our payments or transactions that we process. That's on each bank's systems, and basically they do have some information based on like how much they pay. They know if they pay on time, if they don't pay on time. Of course, each bank use it differently. Some use it, some don't. Others they do like their AI models, and they use it to train their AI models, and it's definitely one of the use cases. I would say one of the most important parts is not only the data, but actually the retention that this brings to banks. If you pay all your bills through one bank, it's highly unlikely that you move to another bank and you need to start setting up your account all over again. Bill payment might not be the most relevant part in terms of like profitability of each bank. We all know that it's one thing that they need to have, but it's not very profitable, or it's not the most profitable. But it is very important for them to retain this account primacy and become the main banking relationship with their users. So I think that's the most relevant part about integrating Tapi and having a very good bill pay experience in app or in the banks. The second, coming back to the second question, which more related to the product side of Tapi. So we are focusing on two things. On one side, we are creating a very comprehensive layer for enterprises and for companies to start accessing our network. That's called Tapi Pay, which basically allows them to process through every single payment method through us with a single integration. That's one part, and that's the idea is to keep growing the network, and as well providing a very comprehensive solution to a lot of billers. Think schools, for example, they usually don't have anything, or sometimes they collect in cash in the local the director collects in cash, but they don't have a lot of alternatives. And then on the other side, a more infrastructure layer, we are building a new direct debit product in order to allow any biller to actually have their payments collected automatically through any bank account. You're the father of a student at a school, and you say, hey, I want for you to collect my school fees every single month, at the 5th of each month, automatically to my Santander account. That's what we are building so far. So basically, that's the most direct debit, similar to the debit method in the UK or the ACH in the US.
Brilliant. Tommy, thank you so much for your time. Super interesting, and congratulations on the raise, and good luck going forward.
Thank you very much. It's been a pleasure.
Well, thank you very much for joining Mex Moves. Please rate us on the platform that you use to listen to us, and hope you tune in next week.